I am Pratap here. We are at second extension to part 1 of lesson 8. In this lesson, we will discuss about equal high and equal low. It is a concept I introduced to improve the trend identification mechanism. We already learned trend can be identified by using these 4 formation types. That is higher high, higher low, lower high and lower low. We had a detailed discussion in our previous videos. So as I told you, I introduced 2 more formations to improve the accuracy in trend identification. The first one is equal high. In short, we can call it as EH. The second one is equal low. In short, we can call it as EL. So let us look into these 2 formations. The first one is equal high. When you compare 2 candles, that is recent candle and previous candle, recent candle's high and previous candle's high should be nearly equal. Then we can call it as equal high. Let's compare this previous candle and this present candle. Now compare the highs. They are nearly equal. Again the next 2 candles. Again you compare the highs. They are nearly equal. So the candle gets equal high formation. Even the next candle also gets equal high formation. So such kind of formation is called equal high. So let us understand what exactly the nearly equal in equal high. Look into this candle. And please look into the next candle. Now compare the high of the previous candle and the present candle. Are they exactly equal? No, they are not exactly equal, but they are nearly equal. How we are saying they are nearly equal? Because we introduced some buffer between these 2 candles. If a candle, if the present candle high is within this buffer compared to the previous candle high, then we can say it is nearly equal. So what is this buffer? A buffer is a small area above this high of this candle and below this high of this candle. A small price area. A small price area just above the high of the candle and below the high of this candle. And this small price area is called as buffer. Okay, why we introduce this buffer? Because most of the times the volatility in the markets will push the price. Due to the volatility changes, the price may not reach exactly the same of the previous high. It may stay a little below and then again it will go down, or it may go a little above and then again it will come back. The prices will go down. I am comparing from the high of the previous candle, because the high of the present candle is not exactly same as the high of the previous candle. But within this small buffer area, we can say nearly equal. Because of this small difference, you cannot say this candle high, this candle means present candle's high, is less than the previous candle high. You cannot say. Of course, it looks like it is less than the previous candle only. But this small difference, this narrow difference cannot change the trend. Just because of this narrow difference, trend cannot be changed because they are nearly equal. And that is the reason why I have introduced a concept called equal high with a small price buffers just above this previous candle's high and just below this previous candle's high, a small price area. Okay, how much this buffer size should be? What should be the small price area? And it is all depending on your understanding of the market and your analysis, and there is no fixed value, but your experience will tell you how much buffer we should accept, at least to consider it is not lower high, or to consider it is not higher high. Just to consider Your experience itself will tell, okay, this difference can be neglected and we can consider both these candles are having equal high. Such kind of impression you should get. Such kind of impression you get or you should feel. Then you can keep that small area as a buffer. Once your experience grows, you will definitely understand how much lenience we can give while comparing the present high and previous high. This lenience, whatever the lenience you are giving, that lenience only the buffer, what I am saying. Hope you understand what exactly this buffer. It is a lenience you are giving when you are comparing the present candles high and previous candles high. So this is what the equal high in this example. Similarly, compare this candle and the next candle. This next candle is the recent candle and this is the previous candle. See, compare when you high of this candle, the previous candle and high of the present candle. It looks like a higher high, right? But this difference is a huge difference or considerable difference or it is a very narrow difference. It is a very narrow difference. Because of this narrow difference, giving or saying higher high and changing the trend, does it make any sense? Because of this narrow difference, changing the trend. Because of this narrow difference, because it is having higher high, it is an uptrend. Does it make any sense? No. Because this difference is not a considerable difference. That is the reason why we can say both these highs are nearly equal. Because they are nearly equal, we are saying the formation as equal high. So this buffer, whatever the buffer you are defining, that is the lenience you are giving while comparing the present candle and the previous candle. Hope you understand what exactly equal high. Same concept you can apply for equal lows as well. The next slide, let us look into equal lows. When you compare two candles, the recent candle low and the previous candle low should be nearly equal. Then we can call it as a equal low. Look into this candle and the next candle and even the next candle. Their lows are equal or nearly equal. So in such kind of situation, we can specify the formation as a equal low between these candles. So what is nearly equal? We already discussed for equal high. Same concept you can apply for lows also. You just introduce a small buffer from this low of this candle. Previously we introduced buffer at the high of the candle. Now introduce at the low of the candle. Just a small buffer area, that is lenience allowed. Just above this low and below this low. This is the lenience we allow. That means if price next candle's low is anywhere within this buffer area, we can call it as an equal low. That is the lenience we are giving. So we can say it is equal. Similarly, compare this candle and the next candle. So both these candles lows are within this allowed area. The lenience we have given, that is buffer. So both these candles are having equal low. So let us identify such kind of concept for identifying the trends. So what is sideways? As per this equal high and equal low, if equal high or equal low, anyone, I am not saying both, equal high and equal low should be there. Either one, when you compare two candles, either one, either equal high or equal low is there, immediately we can say the trend is a sideways trend. Equal high or equal low immediately confirms the trend is a sideways. You need not compare with the previous candles. Previous means comparing apart from these two candles, the one previous or the one next, you need not consider. That is what I mean to say. See, when you are comparing these two candles, it is equal high. So you are not worrying about what should be the low of the next candle. Is it higher low or is it lower low? We don't bother about that. Once it get equal high, that's it. Immediately it is a sideways trend. Similarly, if any of the candle is having equal low, you need not worry about the highs, whether it is higher high or lower high, whatever it is. If equal low is there, immediately we can say the trend is a sideways trend. Similarly, equal high or equal low between swings also indicates sideways. Previously we compared candles. Now we are comparing the swings. You know about the swing we discussed in detail in our previous lessons. Now this is the previous high, and this is the recent high. Now compare both. How we are comparing with the buffer. This is swing high, this is swing low. Now we are comparing the swing highs of the present swing and the previous swing. Now this is the buffer we have introduced. With this buffer, we can say it is equal high. Because the high of the present swing, the high of the previous swing, they are within this buffer area. Buffer means the lenience we are giving while comparing from the previous high. Similarly, when you are comparing lows, this is the swing low, this is the swing high, and again this is the next this is the next swing low. Now compare this swing low with previous swing low. How we are comparing? By adding a buffer at this swing low. Now add the buffer, now you compare this swing low and this swing low. This is the present swing low and this is the previous swing low. Because both these lows are within this buffered area, we can say it is equal low. So because of this concept, instead of saying trend is changed to uptrend, or instead of saying trend is changed to downtrend, just ignoring these minor differences, we are saying trend is still sideways. But what most of the people are doing, just considering the small difference. See, this is the low and this is the low. This swing low is higher than this swing low. But see the difference, it is a very narrow difference. Even by not ignoring this narrow difference, people are saying this is a higher low, so now the trend is uptrend. So when other people are saying uptrend, but what we are saying, no, it is not uptrend, it is still sideways. How we are saying? Because we are ignoring these narrow differences. And we are saying both these lows are nearly equal. That's why it is not a higher low or it is not a lower low. It is a equal low. And equal low always says the trend is sideways. And the moment I introduce this concept, I have seen a huge improvement in the existing trend calculation mechanism. Similar way, the end of the trend also applicable. Now after this price action and it confirmed swing high. Now compare this swing high and previous swing high. Is it higher high or is it lower high? No, it is not higher high or it is not lower high. It is looking nearly equals to previous swing high. So within this buffer area or the allowed lenience, the price is, the high is closed. I mean the high is registered. So we can say equal high. Now you can say a question, where is the bend here? Previously we have seen a bend when there is a lower high. Between higher high and lower high, there is a bend. But we can't see a bend. Where is the bend? Actually, strictly speaking, the bend you have to calculate by seeing the up movement. See what, suppose it is not equal high, if it is higher high, how prices have been compared? with this up movement we would have compared. Now compare this up movement with the change. This is the turn. This turn is called a bend. That means we are comparing the previous trend movement and current trend movement we are comparing. And that movement indicates the bend. This is the bend. And this bend confirms end of the uptrend. The bend need not be between the swing highs between two swings. It can be between the trends or the trend changes. The trend would have been uptrend. Instead of this uptrend, now up from this uptrend there is a bend. This bend indicates end to the trend. Which trend? Uptrend. That's why it is end of the uptrend. Now let us look into one more scenario. This scenario, second scenario in uptrend. Now this up movement confirms this is the swing low. Now compare this swing low and the previous swing low. Now it is easy to compare. See, both are looking almost nearly equal. Let us draw the buffer and let us check. So this low is within this buffer. That means we are saying it is equal low. This equal low confirms end of the uptrend. Because we are seeing a bend here. The trend would have been uptrend, but it is not. That's why we have seen a bend in the trend. The bend in the trend indicates end of the uptrend. So this is the end of the uptrend. Exactly, downtrend also we can see two more scenarios. So this is the downtrend, and now let us see the price action. This price action confirms this is the swing low. This is the latest swing low. Now compare this swing low with the previous swing low. Now it will be easy for you. See this swing low and this swing low. Draw the buffer. So the value is within the buffer area. That means it indicates the equal low. Equal low indicates the end of this downtrend. Why? When you draw this downtrend, this line, when you extend this downtrend line, now for the current price point of view, we have seen a bend. This bend indicates end to the current trend. What is the current trend? Downtrend. So it is end of the downtrend. Exactly the same way, the last scenario, here also. Now this price action confirms there is a swing high. Now compare this swing high and previous swing high. Now it is easy to compare. Now they are almost looking nearly equal. They are nearly equal. Are they nearly equal? Let us draw the buffer line. Yes, it is within this buffer area. And it confirms equal high between this current high and the previous high. The highs are equal, so it is an equal high. And this equal high confirms end of the downtrend. If this downtrend would have been continued, it is like this. But is it a downtrend continuing? No. Because it is not continuing, we are able to see this bend. The bend in the downtrend. This bend in the downtrend is due to equal high. And it confirmed end of the downtrend. So these are the scenarios we can see based on equal highs and equal lows. If this scenario is not there, when you compare this lower high and this lower high, if this high is a major or a minor difference with this lower high, then we would have confirmed this is also lower high and we would have said the trend is a downtrend. But strictly speaking, is it looking like a downtrend? No. The lower low should be visible very clearly. But that is not visible here. So that is the reason why this equal high and equal low concept improved our previous way of or the present way of how currently the experts are studying the trends. Now the experts still say, the stock market experts still say, because of even though the difference is very minor, they say this is a higher high or this is a lower high. So the trend is uptrend or the trend is downtrend. That is the way they are giving confirmation, just because of a minor difference. I felt it is not at all making sense. That's why I got this idea. The moment I got this idea, I have implemented an algorithm in my software, and that software results surprised me. And they're all working in a better way, perfect way. Then I introduced this concept lower high and lower lows, sorry, equal high and equal lows. So as a summary, if you get either equal high or equal low, any one, if you get, immediately you can confirm the trend is the sideways. So this is the point you should understand. So this is about this session. In the next session, let us discuss about trend calculation based on zone violation. This is a pure supply demand zone price action based trend calculation. We will also look into one more important concept, LOTL, and that concept is also having some influence in the trend changes. I hope this video is useful to you in calculating the trends even much accurate way with the help of equal high and equal low concepts. If you are having any questions, please put them in the comment section. I'll try to clarify all our questions. So let us all meet again in our next video. Thank you.